comrades. Taken a bit of creative license with this question from the 2023 exam just to illustrate how to record a purchase return in firstly the inventory card, then the general journal, and then we'll post to the GL, the general ledger. So let's just have a look at this question for a bit of context. So we are buying and selling work boots. We had a credit purchase on the 27th that's relevant here. We know it's a credit purchase because it's an in and we have an invoice, which is what we use to verify credit transactions. The units were $115. So if we look down the bottom here, this is where I've taken a bit of creative license. We have returned 2 damaged sets of boots to our supplier and have been issued with a credit note for the value. Now, this is important in terms of FIFO. This business is using FIFO to record its inventory units. FIFO is not relevant here in terms of making any assumptions. VCAR in the study design actually specify that for purchase returns for the FIFO method, the value will be specified on the credit note or in the details of the descriptor. We do need to work with a FIFO assumption for sales returns, for inventory losses and gains, but in terms of purchase returns, the value will always be specified on the credit note or the descriptor. That's just a key point for starters. Okay, so let's work with the return. So the purchase was an in. So therefore, we're doing the opposite here. We are taking 2 units out of the business. So the first thing we need to do is record the date. Then we record the source document in the second column. And a purchase is an in, so purchase return is going to be an out. 2 units at 115. And then we just need to update our balance. So we've still got those 4 units at 110, so we list those first, and we did have 4 at 115. We've returned 2, so now we're left with 2. All right, the next step is we're going to record that return in our GJ. I'm going to start with the inventory account, which was an out. So therefore, as specified up here, $230, that's going to be a credit to our inventory account. Just going to put that here, inventory. Now, there's a GST component. When we had the purchase, that would have been a debit entry to our GST. It reduces our GST clearing liability to the ATO. So we need to reverse that given we've returned those 2 units. So we take 10% of that 230, and that's going to be a credit entry. It's actually increasing our GST liability to the ATO. Now, total those 2 up, 253, 230 plus 23. And given this was a credit purchase and we have returned those units to our supplier, this is actually reducing our liability to our account payable. So when we reduce the liability, we do a debit entry. And we're just going to debit that to accounts payable. Don't forget your date, 31st of Jan. If we were asked for a narration, as I've got here, the key things we need to do here is we certainly need to cite the credit note 348, and then we just need a basic descriptor. So returned 2 damaged pairs of work boots to supplier dash credit note CN 348. Importantly, we need to identify the source document on our narration to support the audit trail And we also need in our description just basically we want to quantify the number of units and just identify the type of inventory that we're actually returning. Now, if we were posting this to the GL, let's just have a look at what we've done here. We've got a $230 credit in our inventory account. We've got a $23 credit in our GST clearing, and we've got a $253 debit to our accounts payable. So in terms of our cross-referencing, and I'm working with a stylus here, so my font's having some font issues, but our cross-reference in terms of the inventory is going to be accounts payable. Don't forget your date, but I'm going to leave that out here. Same with GST. Our cross-reference is accounts payable, and therefore in our accounts payable, we're going to have a cross-reference with inventory / GST clearing. Oops.